Hello everyone and welcome to this video presentation on different types of contributions. My name is Adam Roth and I am the SMSF manager here at Rogerson Kenny Business Accountants. Just going to give you a rundown today of the different types of basic contributions that go into superannuation. So the two main types of contributions are concessional contributions, also known as before tax contributions, that are generally made into super that include compulsory employer contributions and additional concessional contributions or voluntary contributions that your employer can make or salary sacrifice payments into your fund. So these can be contributions that you make from your personal funds, and there will be tax to pay on those contributions. So essentially, as they're before tax contributions, they need to have tax withdrawn from them at some stage. The second type of contribution is a non-concessional contribution, which is an after-tax contribution. So the tax has already been taken out of this money, and therefore, when you put these into your superannuation fund, there's no tax to be paid. Now, those can be broken down further into the three categories that we've got here: personal, employer contributions, and salary sacrifice. So personal superannuation contributions can be both concessional and non-concessional by nature, and they're essentially amounts that you're choosing. It's a voluntary amount to put into your superannuation fund. So it's not being done by your employer. It's generally from your own money, and for certain reasons, you might choose for that to be a concessional or non-concessional contribution because they have different caps and have different advantages to doing so. The second type we've got there are employer contributions. Now, these are generally concessional by nature, and essentially an employer contribution would be, as most employees would be aware, that there is money going into their superannuation funds, and that's what we would call an employer contribution. It's made by your employer on your behalf, and depending, it's generally 9.5% for everyone, but depending on your award, could be higher than that. The third one there is salary sacrifice. Now, similar to an employer contribution, it is essentially counted as an employer contribution. They do count against the same concessional contributions cap, and it's essentially an arrangement made, can also be referred to as salary packaging or total remuneration packaging, but it's an arrangement made with your employer to put superannuation into your superannuation fund, and generally by sacrificing wages that you earn by and putting more money into superannuation, and there are tax benefits to doing that. So you'll just see a table here, which is the tax treatment of contributions, and I'll just quickly run through it. So the first question there on the left is there tax to be paid on the contribution? So a concessional contribution, yes, there is, and this will be paid by the superannuation fund. So you don't need to worry about taking tax out yourself or having to do anything in your personal tax return. It's the super fund pays that tax when the contribution goes in. For a non-concessional contribution, there's no tax. It's an after-tax contribution, so that simply goes into the fund tax-free. A personal contribution, if the personal contribution is concessional, as you can see in that left box over here, the concessional contributions, the tax is to be taken out and paid by the superannuation fund. And the last box on the right is the employer. All employer contributions are concessional by nature, so refer back to that first box. Yes, there is tax to be paid. The second question there, can a deduction be claimed for this contribution? That should read. Yes, for concessional contributions. Essentially, the entity or the individual that's claiming the contribution can claim a tax deduction for this. So if you have a business making the contribution on your behalf, if you're an employee, then they will be able to claim a deduction for that superannuation contribution. If you are personally making a super contribution into the fund and it's concessional by nature, you can claim a deduction in your personal tax return. So this may be quite beneficial, as the super fund would generally only pay tax on the contribution at 15%, but you would get a deduction at a higher rate in your personal tax return if you have a substantial amount of income in there. So there are some reasons for choosing this where you might be able to save some tax across the board. For a non-concessional contribution, there's no deduction to be had. And similar to the first question, if the contribution is personal in nature and concessional, or an employer contribution, which is always concessional, then they get access to that deduction as well, similarly in the entity or individual who has made the contribution. The third question there, what are the caps for different types of contributions? So for concessional contributions, the cap is $25,000 per annum. Now that means that you can essentially, you need to be wary because employer contributions form part of that cap, as well as personal concessional contributions and salary sacrifice. So just need to be aware that the cap is $25,000, and just to be taking into account all these contributions that you're making so that you don't go over that cap. Now, there have been some announcements as at the 1st of July 2019. If you're under $500,000 in your superannuation fund, and this is across all superannuation funds that you have, then potentially any unused contributions from the prior year can be rolled forward into the next year. So if you only made $15,000 in contributions in one year, you could claim $35,000 in the next year. Or if you only make $15,000 that year, the following year, you could use those two lots of 10,000 that were unused and add them on top of a 25,000 cap for that year to make it 45,000. So there could be reasons for doing that if you have large capital gains, or just if you just have more money in that year that's free up and you want to make a deduction, a contribution into super and claim a deduction for that. For non-concessional contributions, the cap is $100,000 per annum, or there is what's called a 3-year bring forward rule. Now, there are age restrictions to that, and also depending on how much money you have in super, but generally you can bring forward 3 years of non-concessional contributions into 1 year and make a $300,000 non-concessional contribution. This rules you out from making non-concessional contributions in the following 2 years, but essentially it enables you to put in a lump sum in one amount. Now, you can do 150,000 across 2 different years, or a variation of contributions that add up to $300,000. The personal contributions, they stick to what those concessional and non-concessional caps are. So depending on essentially which contribution you are making, those are the 2 caps to the right. So it's to the left, sorry, the $25,000 and the $100,000. That's the same for the employer. They are generally concessional contributions, so they need to stick to that $25,000 cap. That was all for this brief video on contributions. And if you have any questions about contributions, please don't hesitate to ask us. And yeah, we'll be happy to help you out with that. Thank you very much.